Hello, this is Mark from tradingform.com and welcome to this video on what is the Aroon Indicator and how can I use it to make money trading the S&P 500. So firstly, what is the Aroon Indicator? I'm going to have a look on this chart and you can see at the bottom of the chart there is the Aroon. It looks like, on first glance, a little bit similar to other oscillators. We have two lines here with the green line controlling the longs, the buys, and the red line controlling the sells or the shorts. However, if you look at it a bit more closely, what is distinctive about the Aroon is it's quite jerky and it moves in a fairly smooth, or rather a very smooth fashion. Now the reason for this is, unlike other oscillators, the Aroon is actually measuring, it's not measuring price and it's not measuring volume. What it's actually measuring is time periods. So we're using a 25 period Aroon, and this chart, 100 is always the strongest and 0 being the weakest, shows when we have this green here, we've actually made a 25-day breakout. And we can see as the breakout continues, we've got another 25 breakout here, a little bit further on, and gradually as the trend weakens here, we can see the Aroon weakens. 100 for the red line, as we get here, is a 25-day breakout or breakdown to the downside. And we can see as this wanes here, we have equally a strengthening in the price. So we can use the greens to indicate strength and reds to indicate weakness. So what is the strategy that I'm proposing? Well, if I'd like to first of all have a look at my new ebook, which is available now in the Amazon Kindle store. In this ebook I published exactly how to calculate using Excel 21 technical indicators and chart patterns. These include Heikin-Ashi, value charts, Ichimoku, double top, as well as the Aroon Indicator. And so there's lots of different chart patterns and exactly how to calculate it. You also get a free spreadsheet available with the book. Okay, so what is the strategy? Well, it's very simple. In all my videos, I like to present quite a simple strategy run over a relatively long period of time. This isn't a complete trading strategy. Any person, including myself, if I was to trade this strategy, would want to refine it, to tweak it, and make sure that I was fully happy with the strategy. But what I'm doing here is buy when the closing price is above the 200 exponential moving average and the Aroon long crosses above 30. So if you can remember from the Aroon chart, crossing above 30 means the Aroon is coming from a point of weakness to a period of greater strength. Sell in exactly the opposite scenario when the close is below the 200 EMA and the Aroon short line crosses above the 30 line. We're also going to use Aroon as a closing system as well. So we're going to close a buy when the Aroon long crosses below 70. So we're looking at a time when price has been strong but is weakening, and equally the opposite situation closing the sell when the Aroon short line crosses below the 70 line. Okay, so we're going to calculate it today using this spreadsheet here, which is an example of one of the Excel spreadsheets that are available on my website. Also, I do have another ebook available in the Amazon Kindle store, and there is links on the screen if you would like more information about this. So here we have the price data. We're using the S&P 500 from 2000 to the start of 2015, January 2015, and this is the calculation for the Aroon here, and also we have the EMA. If I scroll down here, we can see that the trade logic is in here, which I'm using to show exactly what I just said. Trade when the price is above the EMA, and Aroon moves from below 30 to above 30. got the trade closing logic, and we can see here that the spreadsheet is going to record our profit and loss. Okay, so this is the results of the strategy. I'm starting with a notional $100,000. I'm using a spread charge here, a charge for trading per trade, and I'm using a profit target and a stop loss based on the ATR. Okay, so for the first one, I'm using a very high profit target and stop loss. So I'm basically testing the strategy without any profit target or stop loss or trailing stop. And we can see over here that the strategy performs pretty well. We've got from 100,000, we go up to 180,000, and if you're familiar with the S&P 500 over this time, we can go up from just under 1,500 to just over 2,000. So we've got a gain there that is something just over double what you would have got with a buy and hold strategy. Of course, with this strategy, we are taking profits when the market rises and when it falls as well, which obviously is an advantage if the market spends a prolonged period of time in a bear market. Strategy works pretty nicely here. We've got a relatively low drawdown, which is always nice. We've got a largest winning trade much higher than our largest losing trade. We've got a good win percentage here, 57%, and a good profit factor, which is the absolute value of all the winning trades divided by the losing trades. Over here we have the different inputs into the strategy that we can tweak and change to see how it affects the strategy. One thing we could always do is we could put in a stop loss. So if I change this here to 10, we have no effect. If I change it to 5, there we're starting to have an effect on our net profit, our profit factor. I can change the profit target, say, to 20. We can look at what effect a trailing stop would have. Fairly small effect. We can look at changing the criteria for the strategy. So instead of 70, I want to try 50. And there we can see we can actually get a slightly improved profitability. We could change the entry level from 30 to 50 as well. And we can see again there that we're having a slight effect on the strategy. What a lot of people do these days, of course, is they don't use fully invested strategies. They use leverage because it's available using CFDs and other types of instrument, futures markets. So we can simulate the effect of increasing the leverage. We can see this has quite a significant effect on the strategy, but as always with leverage, the key is to look at the drawdown. We're getting over double the amount of profit, but a greater drawdown. If I put this up to 3, what keeps happening is we keep having a greater level of drawdown, equally a greater level of profitability. So with this strategy here, in its basic form, it is a good profitable strategy. It works well when the market is declining, as it was here in the early 2000s and here again in the financial crisis, 2008 and 9. We can see the strategy performed pretty well during all of that period, much lower drawdown than the underlying market as well. So overall, we've got a pretty nice strategy using the Aroon. It's a breakout type system, and it uses the Aroon Indicator itself to hold on to, lock in as much of those profits as possible. We trade long and short, so we take advantage of market moves to the downside, and to me it looks like a pretty decent strategy over that time period. So if you would like more information about trading using Excel, about the financial market and economics, please go to www.tradeinformed.com.